All right. All right. So we're looking at the usual suspects during London. It's going to be US30, XP 500, and NAS. The reason I went for a buy right here is because I was impatient. I'm not going to lie. I was kind of impatient. I didn't want to miss the move. I saw like a double bottom forming, but most likely it's going to hit my stop loss. So do not go in this trade. Gotta be patient. You gotta let the market come to you. Which I like this area anyways. Like, but if you look at it, it still has a lot of room to actually keep dropping down to. Like look at this. We're only at this, like we're below the 50 and the 61. The market usually will want to come like all the way down here, and that's when you should really like buy. Once the market comes down here, you don't want to be impatient. Want to wait for like my favorite zones are usually like the buy zones over here and the sell zones. You want to look for the highs and the lows of the chart. That's where you want to buy down here or sell down here. You don't want to buy where I bought right now. This is just me taking a little gamble. Um, we'll see what happens. I said a little tight stop loss. So if it hits the stop loss, it doesn't matter. But in reality, I would like to see the market continue to come down. Like at least to this area down there. That's when we want to execute. If the market comes down here, like real tight stop loss, that's the key. The key at the end of the day is having a tight stop loss and controlling your risk management. Like do not risk more than 0.5%, max risk like 1%. But if NAS is giving us some good like wick. I like this wick down here. That's a cool wick. It's trying to shoot up. If NAS shoots up, they're all gonna follow. So that's a good sign that NAS is actually shooting up. If they shoot up, that means this should follow and they should follow, right? Because remember NAS 100 is the top 100 technological stocks, right? So we talk about the shares of the United States. So the shares of the United States are going to affect. They're all very correlated because at the end of the day, like SP 500 is like the top 100. US30 is going to be the top 30 stocks, and NAS 100 is the top 100 stocks, right? The technological stocks, right? So the way you're going to correlate these pairs is by actually like you gotta line them up next to each other. You line them up next to each other, and you gotta look for what the type of stuff that Johnny teaches us, right? Some of the stuff he teaches us is like look for like an inverted hammer, right? Like an inverted hammer. Look, inverted hammer, right there, another one. So we got inverted hammer. Actually, a hammer. That's not inverted hammer. That's a hammer. So, and if you look here closely in the US30, there's also a hammer showing. Like right there, it's like sort of a hammer, right? So you gotta remember these candles, like based on what Johnny teaches us, these candles signify a change of trend, right? It's not always 100% of the time, but there is a possibility we could have a change of trend here, right? I would have seen maybe like some divergence. I was looking for a divergence, but there was no divergence, right? Because they both took out each other's, they took out the lows, right? So look, there's no divergence. Usually if you see like a divergent, like maybe this one didn't take the low and one is like that and the other one was like that, that will also signify a change of trend, okay? That's another confluence, but maybe we get lucky. If I could write this at least real quick scalp, that'd be straight. I'll take $500, right? Like right there. I'm risking $100 to make $500, right? It's good ratio, right? You always want to have at least 1-to-1. 1-to-1 is okay. 1-to-1 is okay, right? Like a 1-to-1. If that's all the market's gonna give you, 1-to-1. Make sure you're moving stop loss to break even, secure profits, take partials, and make sure you do some good trade management, right? Because at the end of the day, it's all about trade management. You could have the best entry, you could have the best mentors, but if you don't learn how to manage your trade, you're gonna constantly fail over and over and over and over until you really figure it out, right? So you gotta master your trade management. You know, your trade management is super key, guys. So once your trade goes into profit, always move stop loss to break even. Facts. Always move stop loss to break even, right? Move the stop loss to break even and start trailing this trade. I don't know, take some people take partials, some people trail it, but the key is to pay yourself, right? You gotta pay yourself. So I think it's gonna hit stop loss. If it takes that low out, I think it's gonna hit the stop loss, guys. But if not, stays right there. See, that's sort of a divergence. That's what I'm talking about. So you see how this wick is down here, and oh, this is a rip. That's it. Stop loss hit. All right. So the next entry, the next possible entry is gonna be probably like at the order block. There's an order block down here. So we gotta wait for the market to come down here. That should be our next possible entry. Wow, that was a stop loss hit. Oh well, it is what it is. All right, so let's see what we got. We're gonna wait for the market to come. See, there's a little gap down here too. Like that. You always buy below the 50%, right? So that's one of the rules, guys. Like you want to buy, so below the 50%, that will be your discount area. So you want to buy always in the discount area. Like you always put your fibs, draw down the 50% line, and anything down here is considered a discount, right? So you want to, but if you keep it even lower, like even the 100%, if the market comes all the way down here, that will be preferably like somewhere down here, right? Because it's going to be a real tight stop loss. Usually where you want to put your stop loss will be below this low, right? Some people want to put their stop loss here, but to keep it safe, you want to put your stop loss below the lows. Like below this low right here, that's where your stop loss is going to go. So we waiting. Right now we're going to wait. Still in a downtrend. Just don't want to miss that move. I feel like it's going to shoot up. It's going to do it. So usually what happens in London, the market's going to do a pullback, right? The market's going to pull back. And then for New York, it's going to start expanding, right? So you're going to catch the fake out. What's today, Monday? It's already Tuesday. So yeah, right now the market's trying to probably go for the low of the week, you know, the low for the week. If you catch the low of the week, then you could ride the whole way to Friday, right? But that's what we're trying to find. We're trying to find that sniper entry, you know, real tight stop loss, sniper entry, low risk, you know, because you could over leverage from those sniper entries when they're two pip, 3 pip stop loss, you know. You're still going to lose the same as if you were risking 20 pips and regular leverage, right? But on a 2-3 pip stop loss, those you could over leverage a little bit because you're not risking. You're practically risking 0.5% or 1% still. You gotta master the numbers, guys. The key is all about math. At the end of the day, forex, you could have the best strategy in the game, but you really have to pack down your strategy like to a science when it comes to the math. You gotta know how much you're risking per trade. You gotta have a trade. You gotta have a trading plan. Let me put it that way. It's called a trading plan. So let's say you have a 10K account, right? Right now there's a 20K account that I'm passing, right? It's a phase 1 20K. So on a 20K account, 1% is it's $200, right? $200. But you don't want to risk $200 in one trade. You actually want to divide that 1% maybe into multiple trades, right? Because what if you miss one? What if you catch a stop loss in one trade? You still have another 0.5% to work with, right? But the max loss you want to have daily, like if you lose more than 1% a day, you shouldn't trade no more that day. That should be part of your trading plan. So like if you lose 1%, you don't trade no more. Or if you lose 0.5%, you don't trade no more. It's up to you. Personally, I've been sticking to like 0.5%. The 0.5% rule has been giving me a lot of success. When I stick to that rule, I lose 0.5%. I don't trade no more that day. Then the next day, I come back, then I hit a good trade for 1, 2, 3%. So it makes up for the 0.5% I lost the day before. But what happens to a lot of traders, they trade with emotions. They're trading with emotions. They don't have nothing written down. They don't have a trading plan. They don't have a game plan. They don't have a trade management. They don't have nothing, right? They think just because they know some strategies that they're gonna come into the market and make some money. But in reality, it doesn't work that way. You actually gotta like write down your trading plan, right? You gotta write down your plan. In order to succeed, you have to have a plan, guys. So trading plan is super key. I really suggest you guys get a trading plan, whatever account you're trying to do. If it's a 10K account, a 20K account, 100K account, they're all gonna do the same trading plan, right? It's always gonna be based on percentages and not money. A lot of people base their trades based on money, on what they see. Oh, I'm making $50. Oh, I'm making 100. Oh, I'm making 1,000. Now it should be based more on the percentages you're making on your account. So if you see your account grow by 0.5% in one trade, you should secure those profits, right? You should move your stop loss to break even. And if you continue to ride, but now you're making 1%, okay. 1%. You continue to trail your stop loss, take some partials of the top. Keys, right? Keys, facts. So make sure you guys are following through with your trading plan. Make sure you're following through with your trade management. Because you guys are in Johnny's chat. Johnny's a beast trader. So he's giving you guys the sauce. He's giving you guys the sauce. All you have to master now is your trading plan, your risk management, and and that's basically it. Do the math, guys. Do the math. So so let's say if you have I'm gonna break it down for you guys. Let's say you have a 10K account, right? 10K account with my Forex funds, right? 10K account. So if you have a 10K account with my Forex funds, right? They give you 30 days, right? They're giving you 30 days, but in reality, they're giving you more time because you could always ask for an extension. I don't know if you guys know that. You could always, if you're in profit and you didn't hit your 8% goal, right? They give you 30 days to hit 8%. They give you eight to hit 8%, right? So 30 days to hit 8%. But if you're in profit, right? If you're in profit, and let's say your 30 days are up, they will actually give you an extension. I don't know if you guys know. They'll give you like another 14 days to work with. So the target here is $800, right? The target is $800, right? So if you divide 800 by 30, it's like not that many. Like that's what it is too. People are trying to rush the process, but it shouldn't be divided by 30. It should be divided because the weekends do count. So 30, we'll divide it by 30 for now. So 800 divided by 30. So that's about $26 a day, right? $26 a day. So you need $26 a day, right? But it takes patience, guys. Everybody wants to get paid now. Like I was looking at some statistics, and out of everybody that do these challenges, only 3% will ever see profit, right? Only 3% will ever see profit. That's just crazy. Only out of 100 people, only 3 people will get to see profit, right? So that tells you how much discipline, how much like consistency you gotta have as a trader in order to see profit. You gotta be probably like an honor student. You're in the top 3% of your class. You're competing against 100 people, and only 3 people will ever see profit. That's crazy. That's just crazy, guys. So okay, so $26 a day, blah blah blah, whatever. So in reality, what you want to risk on a daily basis on a 10K account, I would suggest risking like 0.50% max, 0.50% max, right? So we're talking about $50, right? $50 per trade, and if you can, even less. I suggest even risking like 0.10%, right? 0.10%, like a 0.10% or a 0.20. Keep it low. So we're talking about like $10, yeah. $10 trades, right? $10 trades, guys. That's your risk, right? You want to keep it between, 10, you want to keep it between 50, and max 1%. Only if you have to do 1%, right? Like if you're feeling like dropping 1%. So max you're gonna lose is $100, which I consider to be too much already. 1% is too much, right? Because you gotta think about it, right? How much what is the ways to lose your account, right? So the ways to lose your account is 12%, right? 12%. 12%, right? 12%. So we're talking about $1,200. That's in reality, you don't have $10,000 to trade with. You only have $1,200 to trade with. You know, they give you 10,000. That's for like more what you call it, leverage. Yeah, more leverage. That is gonna give you more margin. That's what it is, more margin. So 12,000, right? That's your. But if you lose, let's say you lose 3 trades in a row. 3 trades in a row. That means if you were risking 1% per trade, you lost $300, right? $300. $300 if you were to like go negative, right? If you lose 3 trades in a row with 0.50, you only lost 150, right? 150. And if you lose 3 trades with a 0.10, you only lost 30 bucks, right? And you got to think about it. This adds up, right? This all adds up. So let's say you have, it happens, a bad week. You lost every week consecutively, right? So you lost 5 trades. Now you're down $500, right? And here you'll be down, whatever, another like 250. And here you'll be down like not even like 100, like $50, right? So the conclusion is, right, what I'm trying to explain to you guys is keep your risk small, because then you're gonna have a really good trade that gives you 3%, right? Like maybe Johnny sends a signal out, you caught the signal, and it gave you 3%, right? So 3% on a 10K, we talk about $300. $300. $300, right? So you made up the 30 plus more. In this one, you made up 150 plus more. But in this one, you broke even, right? You broke even. So this is like the best advice I could give you guys. Keep it between 0.50 and 0.10. Like keep those losses small and keep those wins big. And another thing, guys, the market's not always going to give you 3%, right? Sometimes the market's going to give you 0.5%. Take your 0.5%. Take your $50, right? So let's say you go in a trade. You go in a trade, right? Let's say you went in for this buy over here, and the market went over here, and then you saw a huge wick close out, or move solid to break in and take partials. Do whatever you gotta do, because that trade is gonna come back and hit your break-even spot, right? Hit you in break-even, and now you're gonna feel some type of way. You're gonna feel some type of way because you were in profit. You were in profit a bag. You're like, yo, I'm in profit a bag, and you're thinking it's gonna keep going. There's the emotions people go through, right? Because they don't have a trading plan. So in order to avoid having emotions, you gotta have a trading plan, guys. That's the only way you're gonna get away from your emotions and being such emotional creatures, is by getting more systematic. You gotta get more systematic, break it all down into the math, and that's gonna give you better results, guys. Quit trying to get that one trade that's gonna give you $1 million. You just get, what if you get 5 trades that give you 0.5, right? We're talking about you grew your account by 2.5 that day. They'll hit you your 0.5. Always at least secure the 0.5 per trade. This has to be a golden rule, guys. If you see the market gave you 0.5, and then he came back and he broke you in break even and you didn't make anything, That's your fault, right? Because you have to take 0.5 at least from the market every trade, at least 0.5. So do whatever you gotta do and secure your 0.5. Then you could leave your partials running, and sometimes the trades become even more. So you're gonna have, instead of a 0.5, now this trade gave you 1%, right? You took more partials, then the trade came moving in your direction, and then you take more partials. So now you got 1.5 of that trade. You know, you could look at it as percentages, guys. It's percentages. And that's how you're gonna build your account. Because at the end of the day, you only need 8%, guys. 8%. And you have 30 days, right? So we talk about $26 a day. So even if you're making 50 bucks every day, that means you're gonna pass your challenge in 16 days, right? But you have to have a trading plan, guys. That's like the biggest nugget I could give you guys right now. Because I know you guys are good traders. I know you guys know what you're doing. But now we just gotta like start mastering our emotions. And how you gonna master your emotions? By sticking to the trading plan. Have a trading plan, guys. I thought of going in right here. I thought of going in there. I like this double bottom. See, that's kind of a divergent. That's what I was hoping for. So like right here, right? So you got those two going down, and look at this one. They're almost even. So that's another that's the kind of stuff I look for when I'm trading these pairs, like divergence. That's showing me that the market, you might want to come go do the reversal. So what I will do now, I probably just put my fips down, right? Like right there, that will be the buy right there. So I'm gonna go in, put the stop loss down here, real tight stop loss. Now let's see what the market wants to do. Still has a long way down though. You see all this space? But we shall see what happens. There is an order block right there, so I kind of like that area. There's an order block right there. Look, a little gap too in this one. Always look at the past. The past will tell you the future, right? So look, right there is a gap. So we have a gap. Here's at the OT entries. You put your fibs. It's like between the 70 and the 80. So that's like your OT area. That's where the market likes to retrace. So the market likes to come to those areas, go like this, and it'll shoot up. That'll be perfect, right? Actually, we're in profit already. Hey, we're in profit, guys. So since we're in profit, and I'm over here talking about trading plan and stuff, so let's move the stop loss to break even, right? Protect the back. Must secure some profits, right? I must secure at least the 0.5 that we spoke about. I like the way it's shooting up though. Let's go. We eating. Let's go. I'm just gonna take the like I said, trading plan, guys. So now let's manage the trade. See, me personally, I'm not the best trader in the game. I'm still learning. Like I'm always developing the skill set. I'm always hopping on Zoom calls. I'm always getting mentored by multiple mentors like Johnny, other mentors that I find, like ICT videos, my friends, everybody like teaches me stuff. I learn from everybody, right? You gotta always keep an open mind. Keep an open mind because at the end of the day, You know that saying, you can't teach an old dog new tricks. So you gotta keep that young mentality. Once you think you know everything, you don't learn. You stop learning. You know your coachability index will go down. So always continue to learn, guys. Continue to develop yourself, and also like if you have fear, I want to talk about that too, guys. I want to talk about fear in the market, right? If you have fear in the market, it's because you need to trust God more. You need to trust God more and have more faith. You gotta have more faith and actually realize that like if you're with God, God doesn't like you can't have fear because if you entrust Him with everything that you have, you're gonna be straight. You're gonna be straight. So just remember, yo, like at the end of the day, like just continue to pray because prayer is like my biggest strength, I would say. Cause you're gonna have some bad days, guys. You're gonna have some bad days that they're gonna make you wanna quit, right? You're gonna be like, yo, forget Forex. I hate this shit. You know, you're gonna go through some through some negative patterns, yo. I'm not lying, right? You're gonna go through some negativity that you gotta face, right? Because you know you're gonna blow accounts. You're gonna blow accounts. You're gonna lose money, right? Everybody thinks you're gonna come in and just that's it, instant success, right? I've seen it though. I've seen people come in and have instant success, you know, and like some people do have instant success. Some people it's a year, you know, a year later they'll have success. Some people 2 years they'll have success. Some people 3 years will have success, right? I'm going on my fourth year, right? I had some success. I had some good runs, but overall, I'm still like just scratching the surface, guys. Like I want like the success I have in my mind. I'm not even there yet, right? I want to have like huge amounts of success, guys. Like the amount of power from Forex is crazy. You could change your whole downline, right? You could change your whole generational gap, you know, like from you forward, like all your kids, they could be set, right? So you always gotta keep that into perspective, right? The reason people come in and they quit is because they didn't have a strong why, right? They didn't have a strong why. Maybe their emotions got the best of them. You know, a lot of people gotta learn to control their emotions. See, right there we have a double top. So once you see those double tops and you see like a wick, you see a little shooting star right there, little shooting star. You got a DOG on this one, DOG, and this one's also shooting like a shooting star. That's a sign of reversal, guys, right? That's a sign that the market wants to come back, right? So what we're gonna do, we're gonna secure this bag, right? We're gonna move the stop loss up. I'm gonna secure at least, um, let's secure 200, 200 bucks, right? If it takes me out, it takes me out. But I secure the bag. Like after this trade, I could go to sleep because 200 bucks on the 20K challenge, that's straight. That's straight. We're talking about that's my 1%. Plus the 50 I took earlier, I'll be doing like 1.25% on this trade, right? But the key is just to have your trading plan, guys. You gotta stick to the rules. You know, you might get another re-entry, right? If you want to come down, like I'd rather do that, right? I'd rather hit my stop loss here and then find another entry, right? I could always come back and get another entry, right? That's in a perfect world, right? Some people like to scale it, but you got to remember you're doing a challenge. It's not like it's real money, guys. It's not real money. So at the end of the day, just take profit, take profit, take profit, take profit, take profit. You know, even if you're making 20, 30, 50, 25, it all adds up. At the end of the day, you're like, yo, I made 200 bucks today and you don't even know how. You feel me? Yeah, that was a really good trade we caught. But that was based on divergence, guys. So back to how we caught that trade. As you could see, that you cannot just go based on divergence, right? Because Mike told you go trade based on divergence, and then you go lose a bag, you're gonna blame me for it. No, like you gotta like Like that's where you gotta have risk management, right? Just because you see a divergent, don't go in a buy. Like make sure you're doing buys with proper risk management. You could go in for a buy, right? But if you're going to risk accordingly, guys. What we spoke about. We're only going to risk between 0.10%, 0.5%, and max 1%. Okay. You guys are welcome. And if you guys want to practice this, the divergent strategy, you're more than welcome to. I see it all the time. I've been trading US30 for a minute, the same way. And those divergence, I don't know, something about them. Like, look right here. Let me explain the divergence again. All right, so what happened here? Look, this one broke that low, right? This one broke that low. It did a shooting, a hammer. It did a hammer. Look at this one. This one broke that low as well, right? So it broke that low, right? Broke the low. This one, if you look at NAS, I think NAS wants to shoot up. Come on, NAS, just shoot up. I know you want to. There you go. Let's go, NAS. All right, so this one, look, this one did not break that low. It actually did like a double. That's considered divergent. You got two going down and one going flat. So it's practically a divergent, guys. Okay. I feel like closing this trade already, but let me have a little patience. So you see all those wicks? You see all these wicks, guys? Wicks. We're getting a lot of wicks. So that's also an indication when you're getting a lot of wicks, that's an indication that the market wants to reverse, right? But never mind. I guess the market wants to continue going up. It just broke that high. So you see it break that high. This one broke the high. And you could look for the divergence in the opposite direction as well, right? So this one broke the high, right? They both broke the high. They both broke the high. Sheesh, let's go. Let's go, guys. Let's go. I don't know if you guys got in that trade with me, but that was a really good trade. We still that's a huge wick. That's a huge wick, right? So these are the things you want to look for. Like when you see huge wicks like that, you know that's an indication that the market wants to reverse, right? But you also got to think about it, right? Like you got to think about it like retail traders too. What are retail traders doing right now? Because remember, US30, this is like pure manipulation all the time. Like this is what we're looking at right now. That's manipulation, guys. You know, these are like the banks moving the market, right? They're taking it to their key areas, right? So they're like, oh, let's do a quick pump before we drop the market even more, right? They want to induce people into buying. So what do people do when they see like uptrends? They're like, oh, the market is buying. It's a buy, guys, buy. So what they did right now, they actually took out the highs. There's got so much stuff in this chart. All right, so let me just delete all these numbers. Yeah, they took out those highs. Look at that huge wick. So most likely the market do want to come back and reverse. Oh, we got a chat. Learning from you so I can catch it on my own. Also, once I see it form. That's what it takes, bro. That's what it takes. Once you're able to see it, you cannot unsee it no more. Once you could see it, you cannot unsee it. It's like learning how to ride a bike. You know, like once you ride a bike, once you're able to ride a bike forever. So that's key. That's something key he said. I like that. Because at the end of the day, it's all about like training your eye. It's about training your eye to see these things, right? Because it's like learning a new alphabet, a new language at the end of the day, the financial language, right? That's what we're learning here. But I think I'm gonna take more partials. I'm gonna take another 5 from the top. Yeah, take more partials. I love taking partials. So we got those wicks showing. Let's see what else we're looking at. He just filled this gap. Right there was a gap, right? So he filled the gap. Remember the space the space between the two wicks, right? That wick and this wick are considered gaps, right? Those are the gap will be this space right there, right? There's a little gap, there's a little space. I think they call it something else. What is it? Liquidity? Is it liquidity? Imbalance. An imbalance. I think that's what it is. I call it gaps, but I think they call it imbalance as well. Okay, so it literally came into there, took out these highs, right? So that's pure manipulation, guys. Most likely it's gonna come down again, and then they're gonna do their buy. They're gonna do another buy. I like to catch buys down here. See where we caught that buy? That was a really good entry, guys, because it's real tight stop loss, right? Because remember, your stop loss should always go below the lows. So if you do going for a trade, let's say around this area, right? You gotta measure your stop loss. You know, you take out your tool and you got like, okay, 14 pip stop loss, right? So let's talk about that too. How you gonna determine how much you're gonna drop per trade, right? Just don't drop random numbers. Have that predetermined. You gotta have that predetermined already. So if it's a 30 pip stop loss, right? And you're trying to risk $50 per trade, what you're gonna do, you're gonna divide 50 by 30. Hey Google, what's 50 divided by 30?
50 divided by 30 is approximately 1.67.
1.67, right? So 1.67, $1.67 per pip. So now you know how much you're gonna put in the trade. You're gonna put a 0.16, right? What if it's a 20 pip stop loss? What if it's a 20 pip stop loss, right? 20 pip stop loss. 20 pip stop loss. 20 pip stop loss. Okay, so now you say you want to drop $50, right? You were dropping $50, a 0.5 on a 10K. So you're gonna do the same division. Hey Google, what's 50 divided by 20?
50 divided by 20 is
2.5. 2.5. So now we know with a 50 pip stop loss, we're gonna put a 0.25, right? Because this is gonna add, if you hit your stop loss, that's gonna equal $50. So as long as you always predetermine your risk and the amount of pips, that's the key. So let's do another example. Hey Google, what's 50 divided by 10?
50 divided by 10 is 5.
Okay, so you see, so if it's a 10 pip stop loss, 10 pip, okay, I think I want more partials. More partials. I want more partials. So you see that, guys? I'm taking partials as the trade continues to go up. So look, I took another $100 right there. Boom. I'm still taking partials. I have my stop loss already here in break even. So 10 pip stop loss. Continue with the education. 10 pip stop loss. A 10 pip stop loss is going to be a 0.5. 0.5. Right? Because a 0.5 equals $50. If it's gonna be $50 every time, right? It's gonna be $50. $50. Right? All right. So what if we have a 5 pip stop loss, right? Those are my favorite. My favorite are like 5 pip stop loss. Because this ones you could risk more. Those are my favorite. 5 pip stop loss. I think what we took down here was like a 5 pip stop loss, guys. That was a real tight stop loss. Like literally the stop loss was like, looks 8 pips stop loss. That was beautiful. So 8 pip stop loss. So for a 5 pip stop loss, so you're gonna do the same division. Now you could drop 10. You could drop a standard, right? You could drop a standard, guys, with a 5 pip stop loss. Why? Because it equals, if it hits stop loss, it still equals minus 50, right? And you could also scale it up. You could have a 50 pip stop loss if you want to, as long as you scale it up. 50, so let's do a 50 pip stop loss, right? You could have 100 pip stop loss, right? It doesn't matter as long as you do the math, right? So a 50 pip stop loss, that's going to equal $1 per pip. Why? Because if it hits your stop loss, it's still 50 bucks. Still 50 bucks. Okay, so far I have passed one 10K account, right? I have one 10K account live. I'm working on two 10Ks, phase 2 right now, right? So that's 3 accounts, right? That I'm working on. And thanks to this thing I'm teaching you guys, the trading plan, I've been able to pass these challenges, right? This is the sauce. This is the sauce. If you guys really want to get funded, this is the sauce. Like that's the sauce, guys. Managing your risk. That's it. As long as you manage your risk, you're gonna have a good trading career. You won't have to go through what I went through in my early stages. Because all my mentors, when I first started, they were like, yo, Mike, you need to have a trading plan. You need to have risk management. You know, like they told me that over and over and over and over. But what happened? I got tired of blowing accounts. I got tired of losing. I got tired of being undisciplined. You know, I got really sick and tired of being sick and tired of like losing. So I'm like, yo, something has to give. Like, what am I doing wrong? And then I started like tuning in. I'm like, yo, risk management. That's it. That's the only thing I was lacking because I had the strategy, I had the game plan, I had the mentors, I had the resources, right? But I didn't want to listen. I wanted to do it my own way. I wanted to just over leverage everything. I wanted to just be instant millionaire. It doesn't work that way, guys. You really have to you gotta pack down this. Like if you could pack this down today, it would be beautiful, guys. Like if you could promise me that you're gonna have a trading plan and like risk accordingly and like have good trade management, because this is also something that we're practicing here as well. We're practicing risk management. We're practicing trade management. So risk management and trade management, those are two different skills, but are very important. They're super important, right? I'll move my stop loss up. So yeah, you keep trailing it. You keep trailing it because at the end of the day, I know you want to catch that huge move. That you want to catch those 1,000 pips, right? What if we catch 1,000 pips, right? That would be like 2 Gs, right? You want to catch it all the way to the top. But US30, it's not gonna let you. US30 is gonna first do this. It's gonna go turtle soup, turtle soup, turtle soup, turtle soup, and it might continue to do turtle soups. It's gonna keep taking everybody out until they finally decide to shoot it up, right? That's not your job. Your job is to take profit. Your job is to move the stop loss to break even. Your job is to take partials. This whole thing, that's not your war. Like you can't control the market. You know, you can't do this. These people they got hedge funds. They got trillions of dollars, right? It's a $7.3 trillion market, right? So we're talking about like trillions of dollars are moving through here every day. So if it hits my break even right there, I'm good. I'm good. You know, I made my back. I'm good. I'm done for the day, guys. I'm done for the day. You know, I could have held it longer. I could probably come back and find another entry. You know, but we hit it at right before London, guys. Like right before London. So most likely it's gonna continue shooting up, right? Or maybe it won't, right? Maybe it just comes back and it comes back over here. But but that's it. I'm out the trade. I got my profit. I'm happy. I'm content. I'm grateful. You know, I'm happy. Thank you, God, for my daily bread. And that's the key right there. You gotta be content. You know, some people just want the whole bag right now. It's not gonna work that way, guys. Be content with whatever the market gave you, you know? I'm happy. I'm extremely happy, right? And even if you lose, you should be happy as well. If you lose or win, you should be happy either way. Because when you lose, they're actually lessons. They're lessons. So don't get bitter. Don't get bitter because you lost. Get better, you know? Just because you took a L, don't get bitter and get all salty and all emotional about it. You know, just be like, yo, what's the lesson from this? This is part of God's plan, right? This is part of God's plan. Always see things like that, guys. If you take a L, you know it was part of God's plan. You know, because y'all go ahead. Big facts. Big facts. Yep. It's part of God's plan, guys. So there's a reason we had to go through whatever we went through, because you're gonna be able to teach this to your kids, or you could even teach me one day some stuff. You know that I'm willing to learn from you guys. I'm always open-minded, right? Like I'm sure you guys could teach me some stuff, but yeah, I'm happy the way this trade played out, guys. I'm really happy with the way it played out. We managed it well. We took partials here, we took partials here, we took partials here, and look, now it's retracing. What happens to most traders? They don't have a good trading plan. They don't got a good trade management skills. So you do have to move your stop loss to break even, take partials, keep moving, keep trailing. Because if you want to continue trading, you do it again. Just put your fibs down, right? Put your fibs. Like look for the discount area, right? Below the 50. Look for some gaps. You know, look for some gaps. It's simple, guys. Trading is simple. Like look for some gaps. Look for an order block. You know, you look for confluences. You could like, and then you go here, you pull your thing. You know, you can't be afraid to pull the trigger. If you're afraid to pull the trigger, it's because you're probably over leveraging, right? And you don't have a trading plan. That's what you're scared of. So back to the trading plan. You shouldn't be scared. You should be okay with losing a 0.5 in a trade. You should be okay with that. You should already like know that you're gonna take 100 trades, and out of those 100 trades, you're gonna lose a percentage of them. Nobody's gonna have a perfect record trading. Even Johnny, his trades, his stop loss sometimes, right? The best traders in the game hit stop loss. So you have to know you're gonna hit a stop loss at one point, right? That's why you have a trading plan. So if you're going in from here, let's say it comes to this gap and you want to go in, you measure it. You measure your stop loss. So you're like, okay, I got a 17 pip stop loss, right? And if you don't know how to measure with the ruler, then drop a 0.01. Drop a 0.01 and measure with the 0.01. 0.01, and then you measure it. Okay, so I'm risking $1. What that means is 10 pips, right? There's different ways to measure it, right? So right now it's dropping, guys. We could have gone for that sell. That was a beautiful sell right here. That was a beautiful sell. Like look at that wick. Look at that wick. Beautiful sell, guys. You know, you're going for the sell at the top, but we're already in some people though, you know, some people are beasts like that though. They're going for the buy, they're going for the sell, and they're going for the buy again and sell. And like, yo, I've seen it happen. You could scalp the market. You could literally scalp the market like that. You could go for the buys, you could go for the sales, go for the buy again, and just scale it. As long as you got good risk management, you should be fine, guys. So let's say you want to go in for this trade again, right? You want to look for the buy, right? You want to look for a buy. So you're gonna look at your gaps. I like the 1 minute. It's like a little more detail to me. So like boom, I like that gap right there. Let's see what's happening with NAS. Yo, we caught this on the live, yo. We lit. Hell yeah. That's amazing though. That's some good stuff. So it's dripping. It's dripping, dripping, dripping. So you let's go. We caught that live. That's what's up. Yo, I like this. I like this. So I like this. I want to pull the trigger right now, guys. To tell you the truth, I want to pull the trigger because it's in the area that I like. But we're gonna wait a little longer. Let's wait. Let's wait it out. Wait it out. Like just don't be so fast to pull the trigger, right? You want to be patient. Be patient. Just because he made it to your zone, don't go in right away, right? You be patient. You gotta be patient. Patience is the key, guys. Patience is another key. You have to be patient. If you see like black candles just dripping, why were you going for a buy? Just wait a little bit. Wait for it to come to like a nice area. So right there is about to hit the order block. I think this thing is about to melt, guys, to tell the truth. That's a divergent right here. That just formed a divergent. So I'm not going for a buy again, but I'm gonna risk a little less. I don't want to risk all. Right there, a buy. Put my stop loss right there. Right. Why did I go in for a buy? Because this one already tapped the order block, right? This one tapped the order block. This one's haven't tapped the order block yet, right? So that's kind of a divergent. That's kind of a divergent right there. Why is it a divergent? Because if you look at it, this one is already going down, and this one's over here are up. You see that? They're up. So they did not break those lows. Only this one broke the low. So I like that entry. I like that entry, guys. Because yo, who we got in the building? 4SQ Raso Coro. What's good? All right, so yeah, it's going his stop loss.
Mikey,
What's up? What's up? What's up? Yeah,
was
stop loss
good.
hit. Yeah, I'm done trading for the day, guys. We caught a nice trade earlier. I just wanted to do one more trade for you guys, but that one hit the stop loss, unfortunately. But no, everything's gravy, bro. We just grinding. We actually caught a nice trade. Appreciate you, brother. Appreciate you. I'm actually gonna drop the recording on YouTube for you guys. I must actually stop recording this.